So today we're looking at this amazing trade on First Majestic Silver, and what I'm going to cover in the video for you is, number one, how did I find this ticker to trade on this particular day? Two, what did I do to prepare for the trade? And three, how did I actually take this trade? What was my setup? What was I looking for? And what were my entries, exits, and all that good stuff? The first thing I told you we were going to cover is how did I find this ticker in particular? And so this part's really simple, and I'll just summarize the whole process by saying your routine in the morning is going to depend on the types of strategies you are deploying. I like to personally play on any given day the same tickers, so I'll do that as a strategy. You could do other, extremely high momentum plays or high short float plays. But anyways, the point being, your strategy is going to determine your screener for the day, or at least how you approach the morning. So for me, like I said, I've got the same tickers, but I also add 1 to 2 gaps to my ticker list every day. And these are gaps that I think are high quality, usually a retest gap and a gap and go, in addition to my 4 or 5 regular tickers, just to have that variety, right? Anyways, we're talking about morning routines and how do you go through and find gaps that you're going to play or find tickers that you're going to play depending on your strategy. So for me, I'm looking for retest gaps and gap and goes to add to my 4 or 5 stocks, right? So I'm looking for a stock that is opening at a price that is higher, or expected to open at a price that is higher than where it closed yesterday. That will be a gap up. Or I'm looking for a ticker that is opening at a price lower than the close of the previous day. That is a gap down. Now, whether or not the previous day was bullish or bearish is going to determine whether or not that gap is sort of like this fast-paced gap and go, or it's kind of more of a patient retest gap. But anyway, so for First Majestic Silver, this showed up on my screener the morning of this trade, right? Because it was indicating at least that it was going to open around $12.91. So you'll see where that is on the chart, right? That's right above, that's 5 cents above the high of the previous candle. So I've got my screener in Interactive Brokers in particular that's looking for stocks that are gapping. I'm usually somewhere between 1 to 5% of a gap, and then when I'll click through 20, 30 tickers super fast and just look at their daily chart. If it's gapping and it looks like it's clearing at least the previous day's high or low, and then another pivot or two, I'm pretty excited. Once I saw that this was gapping, even though it was a big gap of 4.5%, right? I usually don't always crave something that big. That might be a little bit extended. And here it does look insanely extended, right? But there's some reasons why, for me, this just made sense. So first of all, the average daily volume on this is about 5.9 million, and that depends on how you measure it. Some places like FinViz will have the 90-day average volume. Here I've got a 20 or 30-day average volume, something a little bit faster, but the average volume is 5.9 million. Yesterday, this stock traded 16.36 million in volume. That's 3 times as much volume as what it does on average. That's really big. You can go bigger, and some trading strategies require at least 3 times relative volume. I could trade a stock that's in its average daily volume. I don't care, but I think this is a plus when I'm seeing that. And then on the day before, it did 2 times its average volume, and the day before that, it was still above its average volume. So I mean, there is a lot of volume coming into here. So that's really good. Relative volume is really high. The momentum is also pretty crazy, right? It's increasing rather quickly. I think you can use a ton of things to look at momentum. You can use MACD, you can use RSI. There is an indicator called rate of change, which it's measuring the rate of change of price over the last X number of days. And you can just see this is, from where this was closing on an average day just a week ago to where it's closing now every single day, that rate of change is accelerating. So, I mean, there seems to be quite a bit of momentum in the stock. There's also quite a bit of volatility in the stock. So one of the things that's fun to look at sometimes, and not required and not all the times, is average true range. And so average true range, I interpret it as a sort of measure of volatility, some like how much action is going to be in this thing today, and will I have enough risk reward if I get in. And so this is a pretty low price ticker at a 12 handle. So that's not, that's not expensive, but it is important to make sure it's going to be moving enough for you to get some action. So what's really interesting about First Majestic is over the past couple days, the average true range went from about 4.5% to almost 6%. And so that's a pretty big jump in average true range. You can tell there's some volatility in there, some interest in there, and surely the volume here, corroborates that. It's really a huge amount of volume, great volatility, and some strong momentum. And then last is And I don't do this often, but sometimes with a move like this that can be extended, or the momentum's been pretty strong and I'm not getting in until second, third day, I just want to make sure that a few other factors are working in my favor. And so one other thing I look at here is short interest. So I think short interest was hovering around 20% of the total float, which the total float was about like 185 million. That's pretty good. There's a lot of folks who have shares short here. And so 20% of the 185 million means you're looking at maybe 30 or 35 million shares short, and average trading volume of 6 million. That means that you could squeeze a lot of folks, and this could run up pretty fast, pretty high, pretty quick. There are entire strategies based just on that concept alone, and they're pretty cool. They're pretty fun. They trade a little faster than my speed, so I don't do them all the time, but this kind of had a confluence of all those good things. So now that we've talked about, all right, how did I find my stock for the day? I'm just going through my screener on Interactive Brokers. Whatever broker you have, you can easily set up screeners. If you don't have if you don't like using your broker for that, there's so many websites with screeners. I could, make a couple recommendations if you wanted to. Looking at the pre-market volume, making sure it's pretty decent, looking at the recent volume, and then do we have a nice gap? Lastly, another thing that caught my eye is just look at the candle from yesterday, the shape of it. I mean, that is like a high wave indecision type candle, and we're gapping above it. Like, I just kind of expect explosive action on this. Even if it's a wild sell-off, I'm just expecting something big on this. My bias is bullish. I'm looking for something long with this. I'm in particularly looking to play this as a retest gap. I expect it to open above the high of yesterday. I expect it to pull back to some level, and then I expect it to take off. And I want to find a pattern at my level that lets me know we've put in a low and I can get in for my gains. How do we find that level? That's where sort of like some of the fun comes in. But diving into that now for a second, I would typically look at a few things on the daily chart to kind of understand, hey, what levels are in my way, what levels are supporting me, what levels are against me, as I dive into a trading time frame, which for me is usually the 3-minute time frame. So I'm looking at the daily. The first thing I'm going to do is look at the 100 and 200 simple moving average. Since silver and everything silver related and everything precious metals related is on an absolute tear, it's nowhere near its 100 daily or 200 daily. And based on what I'm seeing, there's going to be absolutely no interaction with our chart, with our trade today. So then we can go look at, the EMAs. We're going to look at the 10 and the 20 EMA. The 10 is the yellow and the 20 is the blue. These again are, silver is just on a tear. So it's gapping so far away from these. I don't think they're going to become a factor today. And I really don't look at any other EMAs besides this. So for me, this trade is going to come down to, hey, what are the levels, right? Like, what are the key horizontal support and resistance? Yes, we've got the crazy trend, but again, that's not going to mean anything for what we're doing today, right? It's just we're gapping up to here. This is so far away from anything meaningful. So I've got about 6 months of history pulled up here, and I'm just going to go through and look at levels that immediately scream out to me. Obviously, when I see a gap like this down here, I want to just always note that on my chart. Super far away from our trade, but I just think it's important to note this. And you can see this gap sort of goes all the way back right above this shave top bearish candle back here on January 8th. So this is just a level. It's good to know. Also, we have this very prominent top back on super early Jan, right after the new year. So I'm going to want to mark this at some point, and just to know exactly where that is on this trade. That's an important level because it's, one, the very recent high, and then two, it chops right through the day yesterday. So other than that, I'm going to add the high of the previous day. So we've got the high of the previous day at around 1286, and we've got we also have the low of the previous day around 1213. So we were going to want to note those, right? And so when we go from this chart to our intraday time frame, which for me is a 3-minute, we want to know where the high of yesterday was and the low of yesterday was. And then we'll also have these sort of levels. Again, this level being a little more important than this one. It just seems a lot closer to the trade since we're gapping up here. Anyway, so now switching over to our 3-minute time frame. So we have the high of yesterday, which we just marked, the low of yesterday that we just marked, and that recent high from back in January that we marked as well at 1271. So now at this point, really standard practice for me is just always marking the high and low of the pre-market. That's super important for me. I like to have that. And the reason I do that, you could easily just have this up and it's a visual for you the whole time while you're trading, or have, the pre-market up while you're trading and just kind of watch that. But I like to mark the levels because often as soon as the day gets going, I turn off all the extended hours. I just don't like to have that. I like to have less in my charts, less distractions, less noise. I'm going to keep it on here today just so we can kind of see how things move. But what's really cool about this pre-market action so far, came up here and we tried this top a couple times, and then we came back and we have already essentially put in a double bottom right off of yesterday's high in the pre-market. That's pretty good sign for me that I feel very good about my bias to go long. I do have, if I want to take a long trade, I'm going to have to sort of contend with 1332, the pre-market highs level, but I'm not, again, overly concerned about that. What I want to watch is going to be the highs and lows of yesterday and then any major levels. Anyways, let's get into the actual action for the day and see what happens. If this is the first 3-minute candle you see when you're expecting to play a retest gap with some really high volatility, some strong interest in the stock, some momentum, and this is perfect. It is a hammer candle, one of my favorite reversal candles, coming in at the high of yesterday. You can see the high of yesterday is literally piercing right through this hammer candle, and it puts a bottoming tail into this random line that we drew from early January. That is not coincidence, right? Like this is so perfect that it found that level with the bottom of the hammer. The hammer is right at the high of day yesterday. I'm about to go already bullish on this trade. Let me just wait another candle and see what happens. So the next candle comes in, the volume drops off a little bit, and you are now setting up for so many reasons to enter this trade, right? You've got that first opening hammer, which I probably would have taken, although I didn't on this trade right off the bat. I waited, I wanted to be a little patient, and sometimes a trade like this that you're expecting to go sort of like crazy on you does, and you don't even get to get in. And that's okay. I've done this before, and I don't mind that. If it takes off without me, I'll cry a little bit about it during the day, but I'll get over it, right? So anyways, we've got this second 3-minute candle comes in, inverted hammer, again, right through that high of day. It's a magnet for all the action so far in the first 6 minutes of the day. The volume drops off. Not only are you setting up a perfect hammer on the first candle, but you kind of have a bar breakout play if you play that as well. So 2 really good reasons that I want to get in here. So I will also have other time frames up when I'm doing this, right? I like to do something called multiple time frame analysis. It's not a very active practice. It is very passive. I have thumbnail charts at a time frame above and a time frame below where I am trading that I'll always have off to the side on another monitor just to see, like, all right, I see a hammer and a potential 3-bar play on this. Is the 1-minute chart, which is a time frame below, or the 5-minute chart, a time frame above, telling me something completely different? And on this trade, you can see that in the 5-minute chart, we get nearly the same exact hammer. And on the 1-minute chart, we also get a really perfect hammer to start the day. Guys, so I'm going to set up a trade on this. I'm going to take a pretty aggressive trade. I was expecting all this to happen. It all happened. I like what I'm seeing on this, and so I'm gonna play off that hammer, but I'm gonna take more of the bar breakout type of approach. And so what that means for me is I'm gonna put an entry at 12.95 right above the opening hammer, and I'm gonna put a pretty aggressive stop around 12.77, because again, I'm playing the bar breakout approach here. So when you take the bar breakout strategy, if you were going to kind of do that on its own, you're essentially looking at that second candle and seeing that it had this pretty big drop off in volume, and it's covering about 40 to 45% of the range of the first candle, and you're going to put your stop loss just below that. I don't want to be totally stupid and put it directly a penny below it, so I'm going to give myself a few cents of room below the second candle. This trade is looking pretty juicy already, and so I'm going to look for some pretty strong returns, and I'm just going to sort of take profit at various levels where I know I need to. Like, so for example, as this, literally the second I set this trade up, I will look to take some profit around 1R. So for this trade, you're looking about go a third of the way in, since I marked a 3R trade, and we'll just kind of set that up. Or an interesting place to try and get out might be, or try and take some risk off the table, would be right before the pre-market. I will literally put this in as a bracket order, meaning this is my entry at 12.95. My stop loss goes in with my order. It's not something I wait to do later. I don't have stops that I plan to take once the price action goes against me. That's not how I play. My stop loss goes in, my profit target of 13.49 goes in, and I will just take profit off the table at levels that I think are important to just capture something, right? This market's been notorious for giving you a quick spike and then taking it away. That's why I've got this pretty aggressive 1R capture here. Anyways, we'll play this out and see how it goes, right? And we look at that, an absolutely perfect bar breakout play, right? You could just trade this as a pattern in and of itself, and you would do completely fine. So I'm already taking a little bit of profit off the table, and I think on this one I took about 20% off here, and that's a huge amount, especially for something that you think is winning. But I'm just, sometimes I am just ruthlessly focused on getting money and not giving any back. And then we'll go forward another candle. I'm already out now for more than half of my shares on this trade. I mean, this trade is insane. If I would have done nothing, right, in 6 minutes, I would have doubled my money. That is a 2-hour trade in 6 minutes. I think I took maybe half my shares off at this point, but we'll see again when I put the P&L up. But this is beautiful, guys. I mean, look at the volume coming in. Nothing crazy showing me that it's a exhaustion volume or everyone's in and I should get out. No volume drop off. This is just a straight steady rip so far for these 3 candles. Next candle comes in. I love perfect retest. This is an absolutely perfect retest to the high of that massive candle that came in, giving us our first profit target, right? So this is retesting the top of that candle probably to the penny, which is incredible. Hammer candle, I'm not worried about this at all. I'm staying in. Next candle, great. Volume's dropping off. Even more reason to be in here. I should add shares here and move my stop up right below the 1310 level where I took some profit. I mean, this trade looks so freaking good. You've got another potential kind of breakout pattern here. Then you go forward, again, another consolidation, super low volume, right above that profit. Next candle comes in, perfect hammer right through all that. This is going to scare some folks. You're going to start to give back more than half of what you had already seen in your P&L. If you took a 2-hour trade here and you didn't get out at 2-hour, or you wanted to get a little more, now you've lost more than half of what you've seen. And so this is kind of a little bit of a shakeout. The volume, though, is just not convincing. Next candle is amazing. Take out the highs of the previous 2 candles, including that hammer that just came through and retested. I'm feeling pretty good about this. Look at the pickup in volume, guys. Yeah, you've got the pre-market right in front of you. Pre-market is important to recognize. Why you want to sort of just be very aware of it. It is context for your trade, but it is not impassable. Next candle comes in, another hammer, a little bit of a retest. We've got some beautiful rotation on this. Another candle comes in. Now at this point, this is looking double top-ish. I would love to see it starting to make a move. I don't want to wait too long, but at this point, my stop loss is near break even, meaning that if this goes against me, I'm making money today. There is no way for me not to make money today. I have profits locked in and my stop loss is at break even. I will make money today. I cannot lose. I'm very relaxed. I don't give a crap about anything that happens because I am going to make money today. Next candle comes in and huge volume, bullish all the way. It opened, shaved bottom, and just ran right up to, again, where we took some profits off the table right before pre-market, taking out the high of every single candle before it. Next candle comes in, totally reasonable retest right up to the highs of all those previous candles that it took out. We just made a new high above the pre-market, some indecision showing up, trying to figure out which way to go. This is a bullish engulfing candle. We've got a little more consolidation. This is absolutely beautiful. When you see this in your trades, don't be afraid. Price action, consolidating, building some support, a reason to go higher. So on the next candle, I mean, this is it. This thing's going to move. It's going to go up. It's going to retest. It's going to go up. It's going to retest. On the very next candle, I'm out. So this was a 3R target. I'm definitely not making 3Rs on this trade. And that's because I took profit off the table and huge amounts of profit off the table. So I'm going to make a lot less than 3R. And I'm okay with that because I'm making money today and I had zero chance of giving it back after that first candle came in. And so as you could tell, that's really a great strategy for trading, right? Make money and guarantee that you cannot give it back. I ended up with 1.85 Rs, so that's 185% return on my money. On this trade, I risked $144, so I ended up making about $280. I'm not mad at that. That is $280 in about 50 minutes. Yeah, that's a long time, but I'll take that rate any day. You're not going to see me complaining. So anyways, I'll let the rest of the day play out and just see how this trade goes. But essentially, just to recap what we talked about, we found our gap through our morning screener. We set up a plan for how we're going to approach this. And then lastly, we showed how to actually manage the trade. And I hope you enjoyed this trade. Let me know if you have any questions. And until next time, stay profitable.